So instead of working so damn hard to generate more sales, if you can master cash flow and you can actually control how the metabolism works, you don't have to work yourself out to the bone and do burpees all day to lose weight.
Welcome to Fast Foundations office hours. If you don't know much about Fast Foundations, head to fastfoundations.com. We're a community for entrepreneurs, either just getting started or on their way to 7 figures. You graduate from Fast Foundations community once you have your 7-figure year. So that's what we try to get people to do. We try to get people there as fast as possible by teaching them the foundations of business as fast as possible. That's what we do. Today, at the end of the call, I'll talk a little bit about our next event that's coming up the first week of October. Fastfoundations.com/next event. Lauren, if you could throw that in the chat, you can learn more about our next event there. We just announced it today. As long as you're in our community, you can come to our events. So if you want to join the community, go to fastfoundations.com and apply. And if you're in our community, basically, if you've been to one of our events before, we consider you an alumni and you're welcome at all of our future events. And you can head straight to fastfoundations.com/next event and book your ticket for that next event. But here's the deal. We're going to start off with some education. We're going to learn a lot from Shannon. Thank you for being here, Shannon. Appreciate you. We're going to learn everything you need to know about how to stop feeling broke in your business. Shannon is a CPA and fractional CFO for growth-minded business owners, a teacher at heart. Her real-life relatable examples simplify the financial side of business so you can stop stressing and start scaling. She is the host of the IRS's least favorite podcast, Keep What You Earn, and which is consistently ranking in the top 200 in entrepreneurship. She's a frequent speaker in business, coaching communities and masterminds like this one. Everybody say hi in the chat and welcome Shannon.
Hi, guys. So many familiar faces, and I'm excited to be here. Thank you for the intro, RT. My favorite part of my bio is teacher at heart, which is where it comes from. I wanted to teach language when I was younger, and my father convinced me that this was the language to teach. So I absolutely love it. So today, my topic is endless cash, how to stop feeling broke in your business. Because even though we sometimes make a lot of money and we have great revenue targets and we have great revenue goals, we still feel broke. Say me too in the chat if you feel like that sometimes. I'm doing all the things, I'm making money, I'm selling stuff, but what do I have to show for it? Why is all my money gone? Why is all my cash gone? And yes, taxes is a big part of it, but where did all my money go? Me too, if you agree. So this is what we're trying to solve for. And this is the secret thing, the secret sauce that most entrepreneurs don't realize about their money is this thing called cash flow. And we're going to go through a quick and dirty example of how to use cash flow in your business as a tool to fuel your business's growth. So I start with why cash flow actually matters, why financial knowledge and financial literacy matters. And the number one reason small businesses fail is not because they have a crappy offer. It's not because they can't sell. It's not because their product is bad. And it's not because there aren't enough customers. It's because they have a poor understanding of how to manage their business from a financial standpoint. And I thought this was earth-shattering that according to the JP Morgan Chase Institute, the average small business has only 27 days of cash reserves in the bank account, which means a month of cash, which means back when, what happened with the pandemic with 2020, that a lot of businesses closed their doors by May. Why? Because they only had enough cash in the bank to sustain them for a couple of months. They were not running with a good reserve. And that's a big, important part, but it's also understanding how your business processes money that will tell you how healthy it truly is. So when we talk about cash is very important. This is one of my favorite quotes, and I have no idea who said it, where it originated from. Revenue is vanity, profit is sanity, but cash is king. And I think this is absolutely true. Revenue is what you hear everyone boast about on Instagram. 7-figure business, 8-figure business. I made 2 million this year. Great. Good for you. Profit is how much of it are you keeping, right? How much of it are you actually not spending on operating expenses? That's sanity. That makes you feel safer. But cash is how much is actually in the bank account. And the interesting thing about this is profit and cash flow are not the same thing. You can be very profitable and have really crappy cash flow. Did you know that? Say yes or no. Did you know that you can have a bad cash flow, but be profitable? Say yes or no. You actually knew that. Good. Some people knew. Yep. All right. So let's talk about it. So profit versus cash flow. I consider this, I'm going to use a couple of analogies that seem to work well for my clients. That profit is 2-dimensional, cash flow is 3-dimensional. Here's what I mean. Profit is a function of revenue, what you bring in, what you sell, and expenses, what you spend. Cash flow, however, is revenue, expenses, and timing. Timing is everything when it comes to cash flow. The other example I use to explain the difference between these two things is if profit, let's say you're on a health journey. If you've ever been on a diet, on a weight loss goal, anything, you know how this feels. Calorie counting and workouts, right? But it all depends on your metabolism and how you process those calories. How many do you need? How many are you expending? How many are you generating from your workouts? It's actually understanding how your body processes the calories that will help dictate the result. And this is no different. Cash flow is your business's money metabolism. Cash flow is your business's money metabolism. This is the thing that will tell you how you process money in your business. Cash flow is, frankly, inflows, outflows. That's all it is. Inflows and outflows. It's 2-directional. But the timing is everything when it comes to cash flow. I've seen businesses close their doors because even though they had a profitable offer, the timing in which they were collecting money or paying money made all the difference in the world of how much cash was in the bank and if they could survive and run their next payroll. So 3 ways that cash flow actually happens. Operating, which is running your business, selling to your customer, spending money on operating expenses. This is the one we know. Operating is what generates your profit, right? That there's 2 more that you may not be thinking about. Cash flow also enters or exits your business from investing activities, we call it. Purchasing and selling assets. So if you're buying equipment, paying for furniture, paying for a vehicle, making those payments down. So are you paying for or selling assets in your business that are either generating cash or consuming it? And lastly, financing activities. Putting money into your business so that you can run it. So I always say putting cash on the cash register to make change, right? So putting your money into the business so you can help it survive, or taking money out like you do when you take a distribution or a draw, when you pay yourself as the owner. So that's actually a cash outflow. But the kicker is that's not part of your profit because it's not an expense. It's just you taking money out. You're pulling the profit out of the bank account. But the cash flow is about tracking what's in the bank account and what will be in the bank account in the future. So by actually looking at cash flow, you can figure out my business needs to generate X number of dollars in order for me to be able to pull out Y number of dollars and still have a certain amount left over. This allows you to be able to plan, predict what's going to happen in your business, and actually be thoughtful and intentional about your goals of what you need to sell, what you need to be spending, and then what you want to be taking home, as opposed to being a little bit more reactive, which is what we're used to doing, is seeing what we sell, seeing what we spend, and seeing what we can do with what's left over. And sometimes there's not much left over. So one of the things that people don't consider is what's burning your cash. What is actually the reason why you still feel broke in your business, even though you're doing really well with sales? These are the things that I think are some of the biggest cash flow killers. Number 1, customer payment plans. I'm not saying don't offer them, but hear me out. If you're going to offer a payment plan for your service, your coaching program, anything that's longer term, including masterminds and things like this, right? If you're going to offer a payment plan, you need to incentivize cash flow coming in sooner. So if they're going to take longer to pay, it should cost them more money. Or you should be de-incentivizing somehow the longer cash flow that you're going to wait for to collect that payment. And on the flip side, you should incentivize sooner cash flow payment. So making the cost upfront cheaper. I actually like phrasing this in the positive as opposed to the negative. I like that framing when it comes to making an offer. You could basically say, this is what it would be long-term. This is what it would be right now, because you want to encourage people to pay much sooner. The other thing is maintaining control of cash as soon as possible, keeping it in your control quickly. That is called taking the inflows sooner, but you also want to pay outflows slower. So now we're going to talk about prepaying expenses. So if you're going to purchase something, you may think that, let's just say you're buying a software product. I did this with Kajabi, by the way. And I actually did this whole examination of this and said, okay, I can pay for a whole year. Software as a service does this all the time. You can pay for a whole year up front, much cheaper than paying month over month. But I'm thinking, wait a minute, if I paid it all up front now, then I lose control of all of that cash today versus I could steady out the cash outflow over time and use the money that I would have spent on this today towards something else, investing that in something else that grows. And I'm not saying one is right and one is wrong, but I'm saying that before you jump at that prepaid discount or whatever it is for the whole year, think about is that worth giving up control of my cash? Is that worth giving up the control today for the benefit of paying less in total? Because I know I'm going to commit to this whole year anyway. So you have to really think about that stuff. So prepaying your expenses, let's go of control today for your cash. And like I said, not wrong to do that, but this is something that slows down your cash flow. And then finally, large owner draws. A lot of people don't realize how much, it's like how we don't realize how many calories we're eating. People don't realize how many dollars they're taking out of the bank account that could be reinvested into the business. And they're taking these large distributions out, which is mostly a lot of where when my clients come to me and people come to me and they say, where did my money go? Mostly it's like towards your personal rent, towards your personal vehicle, towards your groceries, toward whatever it is. You're taking money out of the business and spending it on personal stuff. And again, not wrong, but that's the truth of what's happening. So now you can figure out, where is my money going? Where would I like it to go? And how are those things different? Is it all going out in personal expenses? Can we start controlling that more as opposed to generating more sales and then taking more distributions out? You're just filling a bucket with a hole in it, right? So instead of working so damn hard to generate more sales, if you can master cash flow and you can actually control how the metabolism works, you don't have to work yourself out to the bone and do burpees all day to lose weight. All you have to do is understand how the system is processing what is put into it. Fundamentally, part of what making more is understanding how your business generates income and spends it over time. You don't just dump money into marketing, ads, coaches, masterminds. You also have to understand how that will be processed, how making more and how spending more impacts your business. You're not growing if you spend everything that you make. So that's cash flow in a nutshell. I have a free cash flow forecast template, so you can actually figure out your own cash flow and be able to figure out how cash flow impacts your business. And my best advice is, if you want to master cash flow, start with a cash flow forecast and enter your business information in, be honest with yourself, be aggressive with how much you're going to spend in expenses and conservative on income. And then the best thing to do is make a note of 3 ways that you can bring in money faster or pay out money slower, and start implementing one of those things consciously. That would be my best advice.
All right, Shannon, thank you. That was awesome. We're going to definitely have time for all kinds of questions. So before I dive into that, I just want to remind everybody that we are recording this every single week as a podcast. So if you're listening to the recording, thank you. If you're here live, if you don't really have to worry too much about taking notes, and if you do want to join us live or you want to invite your friends to join us live here every single week, we do this. We call it office hours. It's free. It's open to anyone, anywhere, but it's always at the same day and the same time. So join us, fastfoundations.com/office hours. If you want to join our community, just head to fastfoundations.com and you get access to all the great things that we do. And then finally, if you want to join us in person, go to fastfoundations.com/next event and check out the upcoming event that we have.
Hey, this is Jim Carter. Thank you for joining the Fast Foundations podcast. We're excited to try this new format. We're grateful you were here to be part of it with us. If you missed the live event, you can join us every Wednesday. Sign up at fastfoundations.com/office hours, and we'll see you next week.